Hey guys, Danny here. This is Capital Cosm, and today I want to talk about inflation in the global economy and why I think inflation is here to stay for the long term. Before we get started though, nothing in this video is financial advice. I am not a financial advisor. Please do your own due diligence. It's your money, it's your responsibility. All right, so let's start things off by looking at China and what China's reopening could potentially spell for the global economy, as well as commodities. In this chart, we've got China's manufacturing index here in blue, and then we've also got copper prices here in red. And as you can tell, they pretty much track one another. China's manufacturing capacity index here has been trending downward since the start of the pandemic. No surprise, because they've been locked down for the better part of 3 years now. And as a result, copper prices seem to have been following that downtrend. But as we head into 2023 and beyond, this forecast tells us that their manufacturing is about to come back online in a really strong way. They recently reopened, but China is still in the midst of a pandemic. They're going through the herd immunity phase right now. The majority of the country has COVID at the moment, so it might take a while, even though they've reopened, for everything to come back online the same way it was pre-2020. But nonetheless, what this chart is telling us is that they're forecasting manufacturing to come back online and bump back in a really strong and measured fashion here, 2023 and 2024. What'll that do to copper? If history's any indication, then copper should follow that trend up. And why is copper so important? Well, copper is called Dr. Copper for a reason, because the general economy tends to correlate with copper usage and the copper price. Why? Because the more we use copper, and the more we manufacture things with copper, like electronics, like cars, like batteries, all this stuff uses copper. And copper utilization is tied directly with economic growth. It implies greater consumption in the economy. So that's why copper is so important. And also in terms of the commodity space as well. It's an industrial metal, and it's the leading industrial metal. Now you can make an argument that maybe silver is the leading industrial metal, but as a pure industrial metal, nothing else comes close to copper. Silver is still a precious metal, industrial metal hybrid. So keeping on track with China, China says they're planning on releasing 46 reactors that are currently in operation or planned to be under construction. For these 46 nuclear reactors are worth about $440 billion over the next 15 years. So this is more than the rest of the world has built in the last 35 years. So this is very bullish when it comes to energy consumption, as well as the uranium price, of course. Now, commodities as a whole seem to have been in a bit of a downtrend since about midsummer here in June. This is the commodity index going back to about a year now. And as you can tell, we've been in a bit of a downtrend since June. We did break this resistance line back in November, and we seem to be using it now as support. Now, what's interesting is that once you look at the dollar simultaneously, in this case, in the form of the DXY, the dollar index, we can see some pretty tight correlation in terms of when the DXY goes up, the commodities index goes down. They're inversely proportional. So if we actually zoom out here, we'll see exactly what I'm talking about. So from a long-term time horizon, we can clearly see that whenever the DXY goes down, the commodity index goes up. And when the commodity index goes down, the DXY goes up. Now, the DXY has had a bit of an impressive run, I've got to say, since May 2021. And especially once the Fed really started tightening the screws here. But it looks like the DXY is cooling off and might be heading back down. We don't know yet, but we've seen this downtrend in the DXY, but we haven't seen a proportional uptrend in the commodity space yet. Are we about to see a proportionate uptrend with commodities now that the DXY is kind of weakening across the board? They have been historically correlated. And also, let's look at gold, how gold is behaving in view of higher interest rates and higher yields. This is the 10-year TIPS yield versus gold. And as you can see here, gold and the TIPS yield tend to move together. Now, what does this mean? It means that when yields go up, gold goes down, and vice versa. The way to read this, guys, is you've got the TIPS yield here in purple, the gold price here in black, and what they've done on this chart is that they've inversed the axis for the TIPS yield. So you've got your positive numbers going down and your negative numbers going up. You see here we've got -1, 0, +1, +2, +3 on the yield. So the more the yield tends to go down, the gold price goes down. Or sorry, the more the TIPS yield tends to go up, the gold price tends to go down, and vice versa. So what's interesting about this chart is that we're seeing the TIPS yield continue to go up, but gold traders aren't buying it. Gold is not buying the fact that these TIPS yields are even real positive, or that they have any real legs at all. Will gold traders win out on this? I don't know, but the market doesn't seem to buy the fact that TIPS will stay here at these yields for much longer. I guess we'll see and find out. And then finally, to kind of harken back on the fact that everyone tends to think that we're in a recession, here is margin debt over time. And as you can see here, margin debt peaked around 2021 at this level here, and we've been going all the way down to lows not seen since about 2001 here at this level. So have we bottomed out? I don't know in terms of the absolute future. I would wager to say that in the near term, I think we have. Just because I think the market is overvalued and we're in a bubble in a lot of different sectors, doesn't mean it's all going to crash at this very moment. I think we are oversold a bit, and we are due for a bounce back up. We'll see. Well, that's all I got for you guys today. Leave me a comment below and let me know what you think. Or have you invested in commodities yet? If so, which commodities? And do you think that this move in gold is indicative of anything more than it is? Is gold a good signal for where the value of the dollar goes from a forward-looking perspective? Drop me a comment, like, subscribe, do all the YouTube stuff, and I'll see you in the next video. Thanks, guys. Bye.